Joe Biden just dropped out. I was not planning on recording you guys a little video, but I have to cover this quickly here. Let you guys know what this means for the market, everything like that. So yeah, it is official. It is out on CNN. Fox News has it. Biden ends bid for second term in White House as he drops out of the 2024 rematch with Trump. It's on the front page of CNBC. So this is official. Now, this has been speculated for several weeks. Let's be very crystal clear about that. This wasn't like this has completely come out of blue. No one ever expected this. This has been speculated heavily for weeks now. And it has even been reported, supposedly, and none of this stuff can be for sure, but it is been said that even Nancy Pelosi, has suggested that Biden get out. It has been suggested that, people have talked about Obama kind of on the DL distancing himself. And so it's been a lot of pressure, right? President Joe Biden has announced he's dropping out of the presidential race after mounting calls from Democrats for his to end his reelection bid. Biden has failed to convince members of his own party that he can defeat former President Donald Trump in November. His poor performance, obviously, in the debate. That was the thing that really pushed people over, was that debate performance, right? Everybody watched that debate and said, no, this isn't going to happen. There's no way. And obviously, since then, we've seen T-Man in regards to polls go up substantially, and there's really no chance he had to win this election, right? I mean, I would say, if I had to put odds on it, less than a 5% probability. Now, what does all this mean for the stock market? Now this is official, right? And now that Joe Biden has dropped out of this re-election campaign. So this means volatility, a lot of volatility. And here's the reason, okay, is now there has to be a whole process that goes through in terms of who takes his place. Is it Vice President Kamala Harris? From my understanding, so there's some reasons why it should be Kamala. One is if it's her, she can use all the funds they've kind of generated directly for her kind of campaign to win presidency. Now, if it's not her, then that money that's been collected has to go to, from my understanding, just to kind of like the Democrats in general, and then that can kind of be spent out there, but it doesn't, like, let's say Gavin Newsom steps up and he's the guy, or whoever you want to say. Now, also, what's my opinion? Can anybody beat Trump on the on the Democratic side? I don't think Gavin Newsom can. I don't honestly think Kamala can. I would be shocked. I think almost everybody has a better chance than Biden did. I'll just be completely honest with you guys. But with that being said, Kamala, I'm not super confident that she'd be able to beat Trump. Gavin Newsom, no. California has been known as too messy over the past few years for him to really come out there and beat Trump. I mean, to be honest, there's only two people that I think could beat Trump. One is if Michelle Obama ran. I think she'd beat Trump. I really, truly do. And even though she doesn't really have any political experience, I just feel very confident she would win that election. The other person I think could beat him is if Barack Obama, another Obama, if he ran as a VP, which he could legally do. With that being said, I don't think the Obamas want anything to do with the White House. So therefore, I think this is pretty much T-Man's election, just to be quite honest. It's his to lose at this point in time. That's the way I would put it. It's his to lose. If he doesn't win this election, that's it's his to lose. I don't know the other way to put it. Like, it's his game now, right? Now, the market, very volatile because everybody's going to be questioning who's going to take Biden's place in this reelection. What are their chances to win? The market has to figure out all these probabilities now, right? If it's Kamala Harris, maybe she has a better chance, but some people feel like she might even have a worse chance if it's Kamala than Biden, right? So then you're kind of just continuing to factor in T-Man as winning, right? I think there's going to be a lot of speculation about it being this person, that person. That's going to cause volatility in the market, because what are those folks going to campaign on, right? And then who would also be the VP? That's another big question, right? So this is going to cause a lot of volatility in the market this week, a lot of volatility. So just a few days ago, the stock market hit all-time highs, new all-time highs. And there's a thought process that goes through a lot of investors' mind when they see the stock market hitting all-time highs, that when the stock market hit all-time highs, that means a crash is coming somewhat very soon, right? Because the stock market can't just keep going up, going up, going up, right? So I want to speak about that in this video. I got a bunch of important things to show you guys around valuations, about what's going on here, around sentiment in the market, those sorts of things. So I want to talk about that and kind of react to that at the front of this video. So Dow Jones Industrial Average, 40,000 plus this week, actually went all the way over 41,000 at one point there for just a quick moment, right? And so, yeah, a lot of people, when they see this going on, the Dow at all-time highs, the NASDAQ at all-time highs, S&P 500 all-time highs, there's like a feeling of like, man, this can't keep going, like this has to be a crash, those sorts of things, okay? No, I wanted to back this up all the way to 1950, okay? What I'm showing you is a Dow all the way backed up to 1950. So the Dow back around that time was around 200, we can call, somewhere around there, roughly, right? And today the Dow is about 40,000, right? So that just in itself should kind of hit you a little bit about like the market over the long term goes up substantially, right? Now also keep in mind, it's very natural for the market to hit all-time highs, and actually the market should be hitting all-time highs unless there's a freak situation, the market should be hitting all-time highs and all-time highs and all-time highs. Usually the only time period you get a real like downdraft in the market is usually if you're going through a Fed hike cycle or if you're going through a recession at that point in time. That's really the only time periods you should actually get the market to go down in any substantial way, right? This period we battled with inflation on and off that really just was brutal on the consumer for about a decade there, right? And it was a very, very tough time for the market. But other than that, I mean, it's up and it's up and it's up and away, okay? So the market should hit all-time highs. It's very natural for it to hit all-time highs. And you know what the next most likely thing is to happen when the market hits all-time highs? It hits another all-time high, okay? And then another one, and then another one, and then eventually the market breaks, right? And you get some sort of recession, you get something to happen. But that's just a little food for thought in regards to that. But let's be very clear, if you're going to get the market to break, you need to get 6 stocks to break, right? Because you got to understand the way the market's weighted nowadays, especially specifically the NASDAQ, and specifically the S&P 500, it's weighted based upon 6 stocks that are really the ones that run the whole market, and you have to get those stocks to break. Meta, Google, Amazon, Apple, Microsoft, and Nvidia. Those 6 stocks are such a huge weighting in the market that unless you get those 6 stocks to break, you're not breaking the stock market, okay? In terms of Dow Jones Industrial Average, that one's weighted a little differently. That one's weighted based upon stock price. It's a very bad weighting they do there. But in order for that one to break, you need to break United Health stock and Goldman Sachs stock, okay? And those are, generally speaking, very tough stocks to break as well, especially when it comes to Goldman Sachs, okay? But we'll focus really on the S&P 500 and the NASDAQ because that's what most people focus on. So are valuations at a point with these stocks that it doesn't make sense, right? Well, let's start with Meta, Google, and Amazon, the smaller of the big dogs, right? These are all $1 trillion plus market caps when it comes to Meta, Google, and Amazon. Amazon's over $2 trillion, but you know, let's start with those, and Google's around $2 trillion as well, right? So in regards to Meta, do we have a valuation problem here? Trailing 12-month P 26, forward P 23, 2-year forward P 19. With those sorts of growth rates, double-digit earnings per share expected here, and triple-digit trailing 12-month earnings per share. And then as far as trailing 12-month revenue growth, 21% on Meta. We're at a current year expected revenue growth of 19.5%. Next year, 14%. Meta, no. The only argument you can make of Meta is how undervalued it is. You can't make an argument that that stock is overvalued. So trying to get Meta to break is near impossible. You could get maybe small downdrafts in the stock, 5-10%. But in terms of getting that stock to really break, to have a crash down 50% is almost impossible now at this point in time, okay? The valuation is just way too undervalued. Google McDougal, same exact thing as Meta. Trailing 12-month, 26, forward P 24, 2-year forward P 19. Trailing 12-month earnings per share growth, 45%. Trailing 12-month revenue growth, 11%. Current year expected revenue growth, 15%. Next year expected 11%. 33% current year earnings per share growth expected, and 16% next year earnings per share growth. Yeah, you can't get Google to break and crash in this market either. So Meta and Google, you can't crash those stocks. They're just too undervalued right now, right? That's tough. Amazon, way undervalued right now. Forward P 42, 2-year forward P 29. For Amazon, that's insanely undervalued. If you look at Amazon's history, Try finding it many times at these sorts of forward P metrics. It's going to be very, very difficult to find the stock ever this undervalued before, right? Current year expected earnings per share growth 53%, coming off a trailing 12-month earnings per share growth of 749%. In revenue growth over the trailing 12 months, 12%, and then over the next couple of years, 12%, right? So you can't get Amazon to break either, right, and crash in this market. There's just going to be way too many buyers if Amazon has even the smallest dip. So in regards to Meta, Google, Amazon, you can't get those ones to break, so you can't get a crash in the market right now, right? Now, if we go to Apple, we go to Microsoft, we go to NVIDIA. Now, this is where things could get a little interesting. How would you like access to all my best course curriculums? My Becoming Master of the Stock Market course, my Stock Market Investing Mastery course, my Stock Options Mastery course, my Millionaire Playbook. How would you like access to all my best courses, as well as the ability to have access to my 6 and 7 figure plus Discord community, where we're constantly keeping in touch with each other, talking about what's going on in the market? How would you like exclusive weekly videos from me? How would you like the ability to see what stocks I'm buying and selling in my $2 million plus Fidelity account? If that all sounds pretty interesting to you, apply to join my private group. That is going to be linked in the description area down there. You can click on that, fill out an application, and go ahead, hop on a call with Andre. Andre will walk you through the whole process. He'll walk you through the whole group, and you can go ahead and join us in there. Once again, the link for that is in the description area. Because Apple is, we can call it a little richer valued. Forward P32 on this baby, it's not very often you ever have seen Apple trade at a forward P in the 30s. Very, very rare, especially in the last, I would say, 10 to 15 years. Pretty darn rare for that to ever happen. So it is a little rich, but remember, there's been a fundamental change in the way Apple stock is viewed. So many years ago on the channel, I told you guys, Apple stock will start to be viewed as a services company first, right? And it will command a higher valuation. If you go back to my videos talking about Apple back in like 2018, 2019, 2020, you'll see that, right? And sure enough, that's what's played out now. And so people really look at Apple as a services business first, and then they look at kind of the hardware as just being like, kind of the cherry on top in regards to the situation. But the services just keeps piling in money, right? And so that's what we have with Apple now. And so if you're going to view it more as a services play, more of as like almost like a SaaS play as well, right? People are going to say, okay, that stock deserves like a 30 multiple on it, right? A 34 P, which is right around where Apple is, right? Now, in regards to Mr. Softy, Microsoft, 37, 35, 29, 2-year forward P. Keep in mind, Microsoft is one of the best business models ever, right? If not the best business model ever. They just continue to collect those fees. People stay signed up for Microsoft products. They got their cloud products, right? And people just stay signed up for those year after year after year after year. And so they just continue to pull in revenue year after year after year, right? Very stable business model. Trailing 12-month earnings per share growth, 25%. Current year expected 13%. Next year, 15%. Trailing 12-month revenue growth, 13%. 16% expected for this year, 12% next year. I mean, yeah, it's hard to make an argument that Microsoft's overvalued here. You make an argument that it's not as undervalued as you'd like the stock to be, but you can't really make an argument that it's overvalued considering the growth rates and considering it's one of the most stable, predictable business models in the history of mankind, right? So that's Microsoft. So it's very hard to get Microsoft to crash. I mean, believe me, if Microsoft went down all of a sudden 30%, I would be buying Microsoft shares personally, loading up a Microsoft stock. And I've never bought Microsoft stock. But if you put that baby down 30%, never mind 40, 50%, I'm going to be buying Microsoft, right? So hard to get that one to break. NVIDIA, okay, this is a controversial one, right? NVIDIA, 68 trailing 12-month PE. Forward P, 49. 2-year out forward P, 33. So first off, we got to understand, like, this company's going to eat up those PE metrics here, right? Now, trailing 12-month earnings per share growth, 755%. Current year expected earnings per share growth, 232%. Next year expected earnings per share growth, 33%. Trailing 12-month revenue growth, 208%. Current year expected revenue growth, 149%. And then next year revenue growth expected 33%. Listen. How can you make an argument that NVIDIA is overvalued right here? You just can't. Not with those sorts of growth rates. Not with those sorts of growth rates. In order to get NVIDIA to crash, you need to crash the growth rates for this company. And until that happens, you cannot get NVIDIA stock to break. And so if you're wondering, when does NVIDIA's business model crack? When do those growth rates crack there? My opinion is at the very earliest, 2026. And that's at the very earliest. It could be out till 2027 or 2028 though. But that's the very earliest. 2024 is basically a guarantee, in my opinion. 2025 is basically a guarantee. Listen to these big companies, what they're having to say about their CapEx for the next year or so. Listening to a company like MU report, listening to what Jensen, the CEO of NVIDIA, is talking about, they're set. So I think to break NVIDIA is going to be very, very, very difficult. Now remember, NVIDIA is also, it's not just about the short-term story, because I think that's what a lot of people get caught up into in regards to NVIDIA, is like what's going on short-term. Oh, it's so exciting. Oh my gosh, right? It is very exciting. But let's not forget, NVIDIA is one of the best long-term companies you could ever imagine. It's one of the best stocks in the last 10, 15, 20 years. The company's incredible, and they're going to continue to be incredible. As long as Jensen's leading that company, his company is going to continue to be incredible, and Jensen looks like he's not done anytime soon. He looks like he's more than happy to continue to lead this company for the next 10, 20 years. And so NVIDIA is just in a sweet spot where they're going to keep innovating, keep changing the game, keep doing things that people never thought was possible before. They're a game-changing company. And so until that breaks, there's going to be buyers from a short-term perspective and a long-term perspective, right? And that's why even when you go through an NVIDIA crash, some people look at the stock and they say it's overvalued, right? And people are happy to pick up shares when it goes through any sort of downdraft because they want to be in that stock long-term. Who wouldn't? Who wouldn't want to be in NVIDIA long-term, right? So just a little food for thought in regards to that, right? By the way, 1000xstocks.com, if you want to apply for access to that, you can right now go to 1000xstocks.com and fill out an application for access to that. What I want to show you now, this is in the private group. We post this every Friday, right? The weekly investor report for everybody that's in the private group. And it's to get you caught up. We just go through a ton of metrics, ton of information to kind of let you know where the market's trading at, what's going on in the market, because I understand not everybody can pay attention to what's going on in the day-to-day like I can or some other folks that might be retired or something like that can, right? So first thing I want to show you here is AIA investor sentiment numbers. So in regards to that specific survey, which really looks at where investors are expecting the market for the next 6 months, people are incredibly bullish on this market, right? 52% bullish, 23% neutral, 23% bearish. So we're clearly under our historical average in regards to bearishness. We're clearly way above in regards to bullishness. And so somebody could look at this, right? And they'd say, well, let me show you one more thing and then we'll discuss that there. CNN Fear and Greed Index is another one that people like to look at for kind of like where sentiment is in the market. This week we're at 49, which is a neutral in regards to fear and greed. So we're not in greedy territory in regards to this index. We're not in fearful territory. Last week was around neutral as well, 54. So as far as stock price strength, fear, stock price breadth is also fear. But then we also have put and call options in extreme greed right now. Not a ton of people are looking at playing put options right now, which could come back to bite people if they're not hedging their portfolios for next year. But I'm really looking at puts come this fall around Q4, especially if this market continues to go risk on, right? But let me show this here, because I think this is a more telling chart of people looking at this and like, people are way too bullish on this market. That means a crash is coming, right? Well, here's the deal. Look at this. Look at this. 1 year bullish high was back December 20th, right? December 20th, 2023. So let's go ahead and let's play this. Let's go 5 year here, right? And let's get this a little closer. And let's see. So back in December, we can say the market, or we can even say January, 38,000 on the Dow. So the Dow's climbed basically another 2,000 points since we reached our bullish high back in December of 2023, right? At least 2,000 points. And then if we were to pull up the NASDAQ, obviously that's substantially higher, right? Everything's substantially higher, the S&P 500. So you had a 1 year bullish high back in December 2023, and that's the highest it's been in the past year. And yet look what happened after that. We still went up and up and up in regards to the market. Look at how well so many stocks have done this year. You could have said back in December, you know what? We can't go up any higher. We've reached the peak. We've reached the peak on this baby. That's it, man. People are too bullish on this market, right? And yet, let's pull up the year-to-dates of some of these stocks, right? Elf on a Shelf's at a 27% gain this year, right? Honest is at 13%. Palantir is at 72%. Oh my gosh, 72%. Meta, 37% on that one, right? Amazon, remember, these are big stocks that everybody talks about, everybody likes to own. 22% on Amazon so far this year. NVIDIA, Oh, baby. They thought NVIDIA was done last year, right? And yet, look at that stock. 144% gain this year. This year, folks. Let's look at Tesla Tesla Tesla, what a crazy one that's been. It's down technically 3% for the year, but if you look at just the past few months, it's up like a ridiculous amount, right? And if we go to big tech, let's pull up the big tech watch list here and see some of these babies. Year to date for AMD is up 9% for so far this year, right? If we already looked at NVIDIA, let's look at the Qs just in general this year. The Qs are up 18% this year. Big dog Apple up 20% so far this year, right? Incredible. Netflix, 35% gain so far this year. Google McDougal, 28%. Jeez. Oh my gosh, right? So once again, you could have said easily, oh, market's peaked. People are too bullish, 52%. People are bullish on the market the next 6 months. Yeah, we're due for a crash, right? And yeah, you can say that, but it's just like, it was wrong, right? It was wrong. And so if people can remain bullish, I've watched it where we've remained bullish for like 2-3 years straight. Like very high bullish numbers. If you can go back and you can look at the very detailed AI investor sentiment numbers, you can look at that very in depth. They have it on their actual website. You can track the data all the way back for like decades in the past, and you can look at the data. You can find we've had time periods where for several years the market remained very bullish as far as investors feeling bullish on the market for the next 6 months. So just a little food for thought in regards to that. Just because the market's high, just because people are bullish, doesn't mean that's the end of the market. The market's done. That's not really the way it works, okay?